Jinesh Gopani. He's the CIO and founder of Taksh Asset Management, joins us right now on the show. Jinesh, good having you. Been a while. Thanks for taking the time out. Hope all is well.
Hi, Neeraj. Good to have you.
Yep. Jinesh, how are you? What is your stance currently? I mean, we've seen a growth slowdown in Q2, which is not looking pretty, but the optimists will argue that there was a thing of the past and things are starting to look up slightly in Q3. They may look even better in 2025. Are you skeptical about investing at the current junction in the markets? And do you anticipate lower levels? Or do you believe these are about the valuations when you would want to deploy capital into select businesses?
As you rightly said, select businesses are offering you those opportunities. In fact, we have to see in next 2 quarters how government starts doing the pump priming of the economy again. And I anticipate that from Jan onwards, you should see government again starting to spend. In fact, last GDP data also which just came has clearly shown that the government spending has come down and the private consumption has faltered. So I think both the two key pillars are important for us to revive growth. I think wait for another 2 quarters and you will see the rebound in the earnings cycle. Even now, the select pockets are offering you good opportunities. In fact, our portfolio, if I may just say, is last quarter, despite weak overall broad market, broad sectors, I think our portfolio has shown 19 to 20% sort of an earnings growth. So I think pockets are available. Some of the sectors are doing well. Our feeling is indices might go into sort of a hibernation for next 6 months. Wait for the next leg of improvement in terms of GDP, but stock-specific activity is going to be pretty strong.
Okay, Jinesh. So is that what you're doing at Taksh? I presume it's a bottom-up AIF or a PMS. And what kind of businesses are you looking to invest in? Considering that I just heard you say that stock-specific activity will continue.
So I think India, as you always see, is a bottom-up stock market. We are not top-down like China. There are many opportunities across sectors, and you will always find 2 or 3 good companies doing pretty well, gaining market share, and versus the others. In fact, with the advent of technology democratizing the business models, many challengers have come to challenge the incumbents. So there is a lot of opportunities if you are in the right sector. So some of the sectors which we feel can become, let's say, like part of Nifty or the future growth drivers for India's GDP growth are disruptive technologies, be it a platform companies or something on the AI side, artificial intelligence, cybersecurity, and so on and so forth. Something on the healthcare side, where I am including both the hospitals as well as CDMO businesses, which I think in this new regime of US, we should stand to gain. Niche financials who are strong in the risk management will continue to do well. I think discretionary spends, which caters to, let's say, top 5-10% of the population of this country, I think there is huge growth opportunity visible. Apart from that, if I go to manufacturing, again, a sweet spot in some of the sectors, along with power, specialty chemicals, auto ancillaries, looks pretty strong over a longer periods of time. Obviously, next 2 quarters, we'll have to see how GDP moves. But stock specific, as I said, there is huge opportunity in making.
Jinesh, hi, it's also Samina joining in. I'm just taking a cue from what you said, and while we do agree that this is a bottom-up approach and has always been with the Indian markets, what I did notice is your bias is very clearly on new economy. Traditional old economy, which is made up of sectors such as manufacturing, industrials, industrial ancillaries, haven't shown up in your buy list. Are you waiting for a better price, or are you of the opinion these sectors are better avoided for the medium term?
See, I think if you really see after COVID, government had to do significant pump priming of the economy. Government has spent a lot over the last 2.5 years. And now that pump priming is over, now government has moved into more of a normal growth in terms of capex program. So whatever heavy lifting had to be done is done, and that is why you saw some of the B2B businesses like capital goods linked to infrastructure did very well. However, the valuations framework doesn't support the way the numbers have come. So we are waiting for right opportunity. But even in that, as I said, power as a sector looks pretty strong, be it generation company to transmission and distribution, renovation company. Also, auto ancillary looks pretty strong, especially on the new tech side, where many companies, small companies, are trying to change their business model. The smaller the companies, better it is for them to be nimble and change their tact with the changing technology world in auto. Specialty chemical, we really feel is a good story, and in fact, in specialty chemical, I also include the CDMO business in that sense, where a lot of opportunity can come by our way if really we are able to toe line with US and we are able to get growth.
Jinesh, you clearly seem to be constructive CDMO here. Now, the problem with that pocket might be that the valuations are discounting the future. So, are you expecting a J-curve effect of growth, which could justify buying or investing into these stocks at the current valuations, because they seem egregiously expensive on FY25 earnings for sure?
Sure. So I think some of the tectonic shifts which are happening in US, be it Biosecure Act, and obviously big innovations coming from some of the MNC players, either in US or Europe. I think if you are looking at a second source supplier and you want to diversify from some of the countries like China, I think India offers a good opportunity for them to really look at. So I think the scale will matter. If some of these companies are able to show that scale and really would want to take this opportunity, and I'm talking from a 3 to 5 year angle, not from short term perspective. I think we have a story in play, and I think to some extent valuations have taken into account. But if earnings growth support continues, I think we'll have this valuation comfort continuing. So I hope companies are able to take the benefit of it and grow at a much faster pace and at a scale which is not seen in India.
Jinesh, you would have had a chance to speak to these companies, to listen to their con calls, etc. Do you sense that these CDMO companies will do that? Is it a pocket that you would be comfortable putting fresh money to work?
Yeah, so not all companies, if I may say.
Of course.
Sometimes it becomes sort of a herd mentality and buzzword that I'm into CDMO. But again, some of the companies who have been in existence, shown their capability of complex chemistry, really, we have seen the inquiry levels going up for them. They are pretty busy, if I may just say, in taking out this opportunity. So some of the companies will really do well. Not all companies who speak about CDMO can scale at a level required, but some of the companies, yes, there is a good opportunity.
Dinesh, I want to just talk to you about financials because they are the cornerstone or the core of the economy, right? It's probably a direct and indirect way of just playing everything that you and me have talked about, or you and Neeraj have talked about. But if one wants to invest in financials, would you recommend going with the traditional brick and mortar financial old school model, or would it be new age financials? And please exemplify this for us, and that would be useful.
See, I think from a product innovation point of view, not much has been, innovation done apart from the credit card, which came long years back. The entire innovation has been on the technology side, turnaround side, and the risk management practices, which some of these banks have really done well over the last 5-10 years. I think it is better to be in good names. It is better to be with the managers who understands risk well and is not growing at a faster pace as expected. Because again, we have to understand finance is not like an FMCG company. If you are lending, there is a chance for hiccups. There is a chance for collection going wrong if the economy stays weak. So I think risk management practices wherever there is good, I think one should place their bet and also be with the larger names, if I may say, because you require capital, and if there are good brands who are able to raise capital at will, I think they face lesser problem when things are bad. and they are able to capitalize the company much faster than the others. So I think sticking with good brand, good name is very, very important.
Jinesh, one final question from my end really. Where is it that you believe there is a chance, or which bucket will give a chance of a meteoric rise? Now, it could be a high risk bet, sure, because some things need to play out, etc. But maybe it was EMS businesses 3 years ago. Maybe it was defense a couple of years ago. Maybe it is something else right now. What is that something else?
See, I think clearly across the board, if you see, disruptive techs have become pretty important. I am not talking only about Q-commerce or food delivery. I am talking about many more businesses which can come on the data center side, or on the artificial intelligence side, or on the cyber security side. So I think these are some of the themes which will emerge over next 5-10 year period, and can give you those meteoric rise if we really grow at 6.5-7% for long period of time. So these are some of the themes which again it will come in form of IPOs, or in some form or the other. But these are some of the themes I think related to tech, related to innovation, related to disruptive businesses. I think that is where the opportunity would lie.
Also, Jinesh, keeping in mind with everything that's happening internationally, export-oriented themes were seeing some euphoric trade in the mid-November after Trump came into power. But there's so many mixed signals, and it's so tough to call it. I know you've talked about the new upcoming themes being more AI focused, so that's why bringing in tech. How do you play the tech pack? And also in pharma, you talked about CDMO. Anything else in pharma that you like that's a good trade for maybe the next 1 to 2 years?
See, in pharma, if you take healthcare as a theme, it's a very long story. India is a young country, so as you age over next 10-15 year period, pharma is here to stay. There are good innovations recently which has happened in US, clearly linked to weight loss programs and drugs and everything. So that should really help further in gaining traction. In fact, this GLP one innovation which has come in, I think it has come, those kind of innovations have come after a long time. So those aspects should do well. So hospital, specialty pharma, and CDMO, all three has a play for next 5-10 years.
Jinesh, well, thanks so much for speaking to us today and giving us an insight into how you guys at Taksh think about things. I really appreciate your time.
Thank you, Neeraj.
All right, that's the view from Taksh Asset Management on markets.